evening, depending on where you're watching this video from. My name is TradeX. Welcome to Phoenix FX Trading. As promised, I'm going to do a base video basically talking about how to go about starting off with Wyckoff. So if you are interested in this topic and this is your first encounter, or this is basically the beginning stage of your encounter with Wyckoff, then I recommend you watch this video till the very end, and I have exciting news for you guys. So before we get to the topic at hand, please be sure to like this video, subscribe to the channel if you haven't. Subscribe to the channel, click the notification bell so that you get notified every single time I make an upload, and leave a comment, man. Just let me know what you think. What are your thoughts, especially on the topic at hand? And yeah, so let's get to the task at hand. So be sure you watch this video till the very end, because I have exciting news for you guys. Don't skip this video to the end. Be sure you watch it throughout the video, because at the end of the video I have some exciting news for those who are interested in this particular topic. So before we get to the topic, I just want to make a quick update on basically the dollar, and what to expect in the next coming days. So before we can go anyway, I saw something on Facebook. It's quite interesting. Somebody was like, trend line and everything, you know what I mean? So they were like looking at this trend line, and they were like, market is going to move to the upside and whatnot, you know what I mean? So this is the expectation of what's going to happen, potentially breaking this structure and then moving to the upside. What did I talk about yesterday? Market trap. And this line has so much liquidity in it, you won't believe it. There's so much stop losses resting below this trend line, and retail traders are just super comfortable about this. Remember, there's an accumulation phase, a potential accumulation phase, right? So what's basically the job of the smart money, the big banks, is to stop you out on early trades, right? Now remember what I said in the last video. An accumulation is basically manipulation of the lows to break structure to the upside, right? It's basically stopping out early buyers, stop them out, then potentially move to wherever, to the upside. So this is all what we are actually waiting for. So if you have your buys here, don't be too comfortable. I don't know, it might go in your favor and whatnot, but just don't be comfortable if you still like buying up based on this trend line, because at any given moment this can break, grab liquidity, create our spring, then the test of the spring, and then the markup phase, breaking structure, backing up action, and then price will simply move to the upside, and you'll be left like, I should have waited, So it's best to be safe than to be sorry, right? So yes, the dollar basically still waiting to see price create basically a spring to the downside, basically grabbing this liquidity on this trend line and potentially grabbing liquidity on this particular level, right? Check this out. Resistance, broken, turn support, So there's somebody out there like, yeah, I'll have my buys, it's above my support, it's about the resistance, so it's best that I go up. You can do that, it's okay. Hence I said, man, things might go against in your favor, but at the same time might go against you. So be sure you have all the information before you can do whatever you want to do. So let's get to the task at hand. Wyckoff, right? Basically I'm just going to do a series on this particular topic. So today's series is basically about the Wyckoff cycle, right? You need to understand the Wyckoff cycle. You can't dive into this topic without understanding the Wyckoff cycle, right? This is something that you need to have. You need to understand it. If you don't understand it, there is no way that you will understand or master what is happening with price in terms of Wyckoff analysis, right? So be sure to watch this video. I'm going to create a series. As I said, it's a series, so I'm going to create multiple videos, just basically browsing through Wyckoff and how to properly go again trading Wyckoff, you know. So today's topic is the Wyckoff cycle, right? This is basically the topic at hand, Wyckoff cycle. So the Wyckoff cycle is basically something like this. I want to explain it to you shortly, right? This is basically what Wyckoff cycle looks like. This is the basic part of it, right? Now you need to understand the stages of the Wyckoff cycle, right? Now we have 4 phases, which are the accumulation phase, the markup phase, the distribution phase, and the markdown phase. And the cycle repeats again. So it ends and repeats again. Same thing, accumulation, markup, distribution, and markdown, right? This is the Wyckoff cycle. Now, for those who trade market structure, so I just want to do a quick comparison of the two so that you make it, so it may make sense, right? Let's say market was trending in the upside, in the upside, right? And we had something of the sort, right? Now, be aware of what I'm gonna, and listen very attentively, right? Lower low, lower high, lower low. I mean, so sorry. Higher low, higher high, higher low, right? Now, get this. This is where you want to buy, right? And this is where you want to sell, right? It's the same thing with Wyckoff, the Wyckoff cycle. This is where you want to buy, right, to chow this move, and this is where you want to sell to chow this move, right? Now, let's make a quick comparison of the two, right? Check this out. Check this, right? Accumulation, right? We enter our buys, and then we have the markup phase, right? Then we have the distribution phase, and then we have the markdown phase, right? Sorry. Right? Come on. Right? And then we're back, right? So this is where you potentially want to buy to chow this move. It's the same thing. Now, Wyckoff is basically there to help us in identifying basically the best reversal points in the market, right? Because if you're trading market structure alone, it becomes a bit hard, a bit difficult, and sometimes impossible for you to know when market is reversing, right? And then you'll be guessing, you'll be taking your fibs, you know, I know how we do, right? You'll be taking your fibs, trying to like guess, okay, maybe at the 61 point whatever, the 62% whatever, you know, you're trying to guess. But with Wyckoff, right? With Wyckoff, after you have identified that, okay, I'm in an accumulation phase, so what is basically happening in the accumulation phase? Stopping out early buyers, and after you have identified that early buyers have been stopped out, that's where you actually place your trades after the break of structure or after the last manipulation of the lows. We'll get to that very soon. And then you identify your entry point, right? After identifying your entry point, you place your buys and then enjoy the markup, right? And in most cases, we have almost no drawback whatsoever because we have waited, we have analyzed, we were patient with our trades, and we took a calculated risk, right? That's basically what Wyckoff is all about, right? Giving us an edge, giving us the heads up, the thumbs up, giving us the thumbs down on whether to enter or when not to enter. So I hope it's quite clear. I hope it's clear the point that I'm trying to make, right? Now, this is basically that. Now, of course, market won't be like this: accumulation, markup, distribution, and the markdown, right? It won't be like this, right? Now, it'll be something of the sort, right? Accumulation, manipulating early buyers, right? Manipulate the early buyers, and then break structure to the upside, right? First phase complete. Second phase, which is the markup phase. Now this is where we enjoy. And then in the middle, we'll be having reaccumulations. We have something of the sort. Okay, let me grab like the proper tool so that it becomes neat, right? We'll be having something of the sort, right? Manipulation of the lows, right? Test of the spring, break of structure to the upside, right? And then that's where we charge this move, right? And then in the middle, along the way, we'll be having something of the sort: manipulation of the lows, same thing, break structure to the upside, and then we enter on the buys. This is the markup phase, right? And then comes the distribution phase: manipulation of the highs to break structure to the downside. Then we have the markdown phase, right? Same thing, right? Little sketchy, I know, but all will make sense very soon. All will make sense soon. We will go through this cycle step by step. Don't be afraid. Now, this is the accumulation phase, right? We wait for early buyers to be taken out, break of structure, we enter, and then the markup phase. This is where we buy now. This is where we buy, this is where we enjoy profits. And then distribution, we close, identify the last manipulation, and then for our last point of supply, and then we short the market. So this is basically what Wyckoff is all about, right? Understanding the price cycle and how it corresponds with market structure. Wyckoff cycle is basically the same as market structure, but with market structure alone, you are incapable of identifying key points of interest in terms of entry, right? Now, don't focus on the sketch that I've just drawn right now. I know it's a bit hush-hush, but all will make sense very soon. All will make sense. Now, if now you have questions on what I've just talked about, please be sure to leave them in the comment section. Pause this video, comment, let me know what you think so far, and resume the video. Now that you understand that the Wyckoff cycle and market structure are basically the same thing, it's just that with Wyckoff, right? With Wyckoff, you're able to see when price is simply going to reverse or continue, right? Trading market structure alone is not enough for you to be able to know these things, right? Now you'll be playing guessing games in terms of price. It has reached $18,000. It has $1,840, right? And then you're now guessing along those lines, along those support and resistance lines, and which is not a good way to trade. So in this particular series, we will dive deeper into trying to understand exactly what Wyckoff is all about, how to go about trading Wyckoff. Now this video is just an introduction, nothing major. We will dive deeper. We will just dive deeper. Hence I said, don't let the sketches that I've drawn to frighten you in this topic. That was just a rough sketch of how the market may look, because Markets are not smooth as we illustrate them in these diagrams, right? We all know that. So to talk about what I said in the beginning of the video, that I have a surprise for you guys. Okay, the surprise is if we can now blow up this channel, reach 100 subscribers, I will personally handpick 10 lucky subscribers on my channel to spend an entire week with me, right? Mentoring you guys, having live sessions for an entire week absolutely for free. Now we will do this every single time we hit 100 new subscribers. So blow this channel up, and as the channel grows, the number increases, right? Now be sure to like, subscribe to this channel. If you haven't, leave a comment, let me know what you think, man. Like, it's very important for me to know what you think, very important. So share this video if you found it helpful. Be sure that we gonna be having that mentorship, so free live mentorship whereby you get to interact with me on regular basis for an entire week. And yeah, so till we meet again on the next video. So this video was just an introduction on what we're going to be dealing with. So in the next video we're going to be basically talking about how to properly identify these key points of area, basically identifying and marking the Wyckoff structures. So thank you so much, awesome people. You have been wonderful.